Let's talk charts, let's talk technicals, themes and ideas for 2025. Gautam, okay. You know, the way markets are moving, it just reminds me of that Jaspal Bhatti show, Ulta Pulta. Everything's become Ulta Pulta.
Yeah, good morning, Nikunj. I understand that sentiment, but I think there was a period in the last couple of years where nothing was ulta pulta. I think the trend was as clean as it can got. It could have got just about every stock, every sector, every trend in the market was as clean as it can get. So this is typical mean reversion. I mean, I know everybody's making a lot about what has happened in the last 3 months, but if you really read this correction in the context of the rise of the last 15, 18 months, honestly, it's not much. I think there was a little bit of madness on the screen last August, September with the mid caps, small caps, SMEs, story-based stocks, narrative-based stocks. All of that has happened, and I do believe that this is a very healthy correction within the larger bull market. And I think there is a case of irrational pessimism at this point of time. I know when you look at the screen and moves like yesterday, you will get confused, you will get scared. But I think if you stick to quality stocks, this market still has a lot of potential. And mind you, it's just Indian markets, which have just moved off the track. If you look at global markets, US is in a great place. Asia has been doing well. European markets have done well. So there have been local issues on what the rupee has done, what the dollar index has done, what oil has done, FII selling, a bit of a slowdown on the earnings. So all of those factors have been factored in these last 2.5 months. But at 23,000 index, give or take 2-3%, I think this market has once again come to a point where the risk reward is justified to take investment longs.
Okay, so 6 months from now, when we will analyze January 2025, in hindsight, would that be counted as the best buying opportunity of this bull market?
I think so, and you'll be amazed to know, Nikunj, that in the last 25 years, we track data all the way back from 2000. January is known for its challenging times. It's known for its market tops. If you remember, it happened in 2008, it happened in 2000, and many other years where you have had, historic market tops or market corrections in the month of January. This time was expected in some sense because I think the GDP numbers were terrible. People were concerned about the slowdown, the Trump factor, what the RBI does, the budget expectations, given all that has happened in the last 2 years. But I do believe that this is a great buying opportunity because as a technical analyst, when I read the weekly and the monthly charts, I'm encouraged to believe that this is a correction within the larger bull market. That's the only thing you need to answer. If you're thinking 2 weeks and 2 months, this market will be very difficult for you. But I think if you're thinking 6 months, 12 months, 18 months, I think the risk reward is justified.
Sure. So, Gautam, what's the range that you're calling for the Nifty? We've already fallen over about 12% at an index level alone. How much more of a cool off can we see from these levels? And what's the plausible upside?
Well, see, on an index level, as you rightly said, we followed about 12%, but the average decline in all of NSE is about 26%. So that's the kind of disconnect that you've seen between the indices, and the overall market. So in some sense, in the last 4 months, we've already seen a very large bear market. And it's only the top quality stocks which have come under pressure in the last 3 weeks, as you might have noticed, because I think mid caps and small caps in some sense have really stopped correcting. If you look at the mid cap and the small cap index, they haven't done anything, in comparison to the rise that we have seen in the last 15 to 18 months. But coming back to your point, how much more weakness? Let's put two scenarios. The more optimistic scenario is that the market bottoms out somewhere in this 22,800, 23,000 area, which I think is very important based on multiple studies. Breadth studies are oversold, sentiment is oversold, it can't get worse in terms of sentiment. So optimistic scenario is we bottom out somewhere here, 22,800 to 23,000. Pessimistic scenario is that if the budget does not go off well, FI selling continues, results don't go off well, SDFC Bank does not surprise positively, then we go down to that 21,800, 22,000 zone, which I think is really the worst case which I'm looking at. But look at the bigger picture. So even from current levels, your downside potential is about 4%. But if everything goes back on track, I'm quite confident that over the next 18 months, you could see the Nifty move towards 26,000 and possibly even at 28,400. So 4% downside risk, 20% upside potential. That's the risk reward an investor has at this point of time.
All right. Sure. Gautam, the other thing is, what we've seen, and that's been quite peculiar to this bull market. I mean, it's not like we've not seen 2% kind of declines. Even sometimes in a single day, we've fallen 2%, right? Case in point being when you had the election outcome back in June last year. But these dips have been very, very swiftly bought. When we are to make a comeback, and we've also seen a lot of sectoral churn, if you will, that's been one of those distinct flavors of this bull run from those 2020 lows. When we rebound, what's going to rebound first? What's going to lead us back in the green?
I think quality is going to rebound and value is going to rebound. I think we've seen this in the recent past. Anything that was very richly valued comes under the pressure very quickly. I think Asian Paints has been a case in point for almost 3.5 years. People have been hoping that the stock in the sector will come back, but it just doesn't come back. Whereas if you look at value stocks, in some sense has done very well. I don't think you have an environment wherein anything that is substandard is going to do well or is going to come back with the market. Mind you, domestic mutual funds are still sitting with a lot of cash, and I think everybody is just waiting for stability on the screen. The moment you're going to see stability, I think all those cash will get deployed, and it will get deployed in the top 300. So the mid cap 100, the small cap 100, and possibly the Nifty 50 and the next 50. So that's the basket of 300 stocks where I feel the rebound will happen quickly. But as I said earlier, anything that was substandard and very richly valued, I don't think is going to do as well. Also, I think you have a case in point where India has to be aligned with the rest of the world. We can't have a different path of our own, which has been the case for the last 3 months. I think the market is trying to discount all those negative factors that we have locally. And once that get discounted, hopefully in the next 7-10 days, we will be aligned with the rest of the world.
Right. Gautam, typically when this kind of a shakeout happens, the leadership changes. For example, post-COVID, the leadership changed in favor of PSUs. Post the Ukraine crisis, the leadership changed in favor of manufacturing. In this shakeout, and I'm calling this as a shakeout, will the leadership change or will the leadership still rest with PSUs?
I don't think the leadership is going to be with PSUs because PSUs are now discovered. When they initially did well a couple of years back, for 10 years, they went through a period of underperformance. So everybody realized that why shouldn't I buy a 6p, 7p stocks, and why should I be committed in a 60p, 70p stock? So I think that cycle has really played out. I do believe that financial services is one basket that can really make a big comeback this year and take leadership. So I'm talking about the top banks, the NBFCs, and the insurance companies. So the financial services index, according to me, should be one of the star performers going forward. And there is a very big valuation disconnect as well. I mean, if you look at the Nifty P and the Bank Nifty P and where the Bank Nifty is in terms of all valuation metrics and even the charts, I believe this is an index that can really help the markets come back at some point of time. So I'm really hoping that SDFC Bank comes up with something more positive. The other sector, which I think can now take leadership, is auto. So I think auto is a space that we like. All the top stocks, the top 3 or 4 names after this correction of the last 6 months. So that can also take some sort of a leadership. We also like real estate and metals. And we believe that at current prices, again, the risk reward is excellent for long-term investors.
Okay. So Gautam, we've put this chart out, which is that we've looked at stocks which are flat from last 3 years. I'm using that for benchmark. And the names here are interesting, Gautam. Nifty in last 3 years has gained about 35%. Kotak Mahindra Bank is up 7, Bajaj Finance is up 6, Bajaj Finserv is up 6. But HUL, HDFC Life, Infosys and Tech Mahindra are actually down. Could this be a very crude way of approaching the market, jo chala nahi hai, wo chalega, which is that let's look at some large cap stocks. This includes Reliance also. 3 years the gains have been nothing, and now they are the ones who could really start coming back.
Well, I don't think that might be the right approach. I think at the end of the day, stocks do well if there is earnings and if there is earnings visibility. And from this entire set, if I have to really pick one name, it's Bajaj Finance. I think it's an absolute no-brainer in terms of fundamentals and the earnings visibility from here. Chartically also, it's come to a point where the downside is just nothing. The 6,500, 7,000 area is an important support. I'm still not a big fan of Kotak Bank. I would love to buy an SBI at a 9p. Why should I go with the Kotak Bank, which is much more richly valued? And some of the other consumption names, which is there, in that list like the HULs of the world, again, I wouldn't touch them. I don't think they have the potential. So out of the names that you listed out there, Bajaj Finance would, for me, be on top of the list.
Gautam, also talk to us about the commodity construct, because a lot's been happening there, and you do track crude, and amidst a lot of these news flow, we see crude is flirting with that $80 per barrel mark. Help us with your understanding on the same, and also at this price point, any of these OMCs look attractive to you, because now they have been trading quite lower, and even some of the brokerages are finding opportunities there. So help us with your take on the same.
See, I think our local problems have really come from external factors. I mean, if you remember, till 3 months back, rupee was in a range for about 18 months. It was absolutely boring to even look at the rupee because it was just stagnant at the same price for a very long period of time. Something similar happened with the crude. If you remember, NYMEX crude was trading in that band of about 65 to about 73, and it stayed there for a very long period of time. As NYMEX crude started to rally, as rupee started to depreciate, as the dollar index started to appreciate, there were issues that India had to deal with. And on top of that, you had FII selling. I think these factors were responsible, but now they've all come to a point where I think they will cool off. I don't think the rupee can continue to depreciate. I don't think the oil can sustain beyond levels of 85. I don't see the dollar index sustaining above 109, 110. Given that, I feel that sanity is going to return, because if these factors are in control, and if the budget is market friendly, which I'm hoping, and we believe that it could be this time, then I think things get back on track quickly.
I've never heard you sound so bullish, my friend. I'm lacking this new Gautam.
Last October when we put out a bearish view, it was very difficult to actually put out that stand. But what's happened in the last 3 weeks is a little more complex. When I cut out all the noise, and when we look at the monthly charts and we put common sense on the tables in terms of India versus the rest of the world, I just feel that it's very irrational with what has happened right now. Agree, there is a bit of a slowdown, there are fears, there is FII selling. But where is that talk of 25,000 crores domestic money that's coming into the system every month? Everybody's forgotten it. I think that's going to come at play on the first signs of stability.
But Gautam, if we talk about some of the metal counters, then it's been a while that you have been vouching out for those. I've been tracking you for the last 3-4 interactions that we have had, and metals is something that, do you still like at this price point, because the stock specific action wasn't that much?
Yeah, we like it. I think it's seen a bit of a dip in the last 3 weeks because it's high beta, so it falls with the market, and with what dollar index has done, and given the news flow from China, you have seen metal stocks correct. But I think at current index levels of about 8,000, 8,500, again, the downside is very limited. Once again, please look at the context of the rise. In the last 2 years, the metals index, I think, is up close to 3 times. After that, the 6 month, 8 month long consolidation is normal. And I think many of these metal stocks are now very well valued, and I think there is a clear case. The Vedantas and the Hindalcos and the JSPLs of the world, I think, are very well priced, and I would be comfortable buying into them. And I do believe that there is a case for return of Hong Kong and China as equity markets. If that happens, I think it's going to be good for metal stocks. So yes, I like the top names. I think the Jindal Group stocks, JSPL and JSW Steel, followed by, say, a Hindalco and a Nalco and a Vedanta. I do believe that there is value. But again, please don't look at things 2 weeks or 2 months. If you look at things 12 months, the market is comfortable for metals.
I just want to elaborate on that point and just be with me for the benefit of our viewers. And I'm not going to say once upon a time, I'll just talk about last 3 years. In last 3 years, this is the third time we've seen this kind of a correction. The correction could be triggered because of Ukraine or Russia crisis. We don't talk about it today. Then it got triggered because of high interest rates and high inflation. We don't talk about it. Today, what we're talking about is a dollar-led, dollar strength correction, or the welcome back Trump correction. All I can say is that both Gautam and me would agree that this is passé now. When the correction hits you, it will test your temperament. It will force you to rethink. It will tell you to commit more to discipline. But that's what markets are all about. They keep on periodically keep on checking your patience, perseverance, and also your risk management with something which needs to be maintained. So Gautam, let's wrap this lovely discussion with some names. I'll put the time horizon and I'll keep everything else open. 12 months plus. Give me your top large cap idea, mid cap idea and small cap idea, and I'm just going to say to our viewers that the disclosure would be that Gautam and his clients may be invested in them, or they are planning to invest in them. So that is the disclosure, Gautam. Let's get the list going now.
See, I don't want to comment on mid caps and small caps. I don't think that would be right, because for that I'll have to give update to your viewers on a regular basis given the kind of volatility we've had. But I think among the large caps, I would definitely go with the Bajaj Finance in the NBFC space. I've been a big bull on it for a while now, and I believe that it will deliver over the next 12 to 18 months. I'm a firm believer of SBI and SDFC Bank doing exceedingly well from here. I think the downside is limited and the upside is quite large. In the auto space, I do believe Tata Motors, Maruti and Eicher Motors have the potential of doing something special over the next 6 to 12 months. So again, those are three bets which we like. In the real estate space, you really cannot go wrong with the Oberoi Realty and DLF. In fact, DLF being a favorite for almost 4 years now. So I think some of these 2-3 stocks also stand out for us. So I'm looking at this basket, and I would also want to add JSW Steel and JSPL in metals. I've purposely spoken about top quality large cap names, and I do believe that these large caps, once the market stabilizes, can give you mid cap returns. I think people need to lower their return expectations. Every time I spoke to people, they said, which is the stock which is going to double? Now you should ask the question, which is that stock that can give me a 20 to 40% kind of an upside when the Nifty environment is about 10 to 15%.
All right, Gautam, with this, we'll let you go on that. Great chatting with you today morning, and definitely, given the market volatility that we have been having, it's good to get your bullish and your positive stance on the markets. Definitely, the bears could get some charge over there. Thank you so much for your time.
Thank you. Pleasure.